Good morning, everybody. Hey, welcome to Friday, December 3rd, and it's a big day here at Statler Financial as we prepare for Shred Day. That's where we bring in this big shredder truck from 10 to 2 today, Friday, December 3rd, 10 to 2, back behind our office. We'll have the shred truck there. We'll have a drive-through. You don't even have to get out of your car, pop the trunk. We'll have people there to get your stuff out for you, take it to the shred truck and get it shredded. So excited about that. This is our annual event that we enjoy doing for the community. So with that, I hope we'll see you sometime today driving through and getting your stuff shredded. Hey, remember though, we've had a lot of volatility the last 2 weeks, and it could continue today as we have a few economic numbers coming out. And who knows where that will drive us at the end. But remember, there's only one thing that you can control, and that's the risk you have in your portfolio. And that's why we developed our core retirement design to help you analyze that and to make sure that you have the retirement you always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement design. Thanks for joining us today. We'll have Dave here in just a moment, and Dave will be here today too from 10 to 2 to help us celebrate the Shred Day.
105.7 Light FM. I hope you dance. I hope you get rid of your important papers today, too, starting at 10 at Statler Financial Services. Speak of the devil, it's time to check in and see what's going on with your money with our local pro, Phillip Statler from Statler Financial Services, who I sincerely hope can hear me on the line this morning. Phillip, can you hear me?
I can hear you today, Dave. I don't know what happened yesterday. You just kind of faded off into Never Land.
I've got a sneaking hunch I know, and I think this time it was my fault. I got a burned out button light here, and I didn't know I wasn't feeding you junk, so I apologize. We're starting out this morning with a whole bunch of disappointments on the economic front. Let's set the table first of all. Yesterday we had one of those recovery days. Dow ended up just skyrocketing, up 618 points. Standard & Poor's was up by almost 1.5%, too, up 64. And NASDAQ was up 0.8% at 127 points up. Now, the rhythm we seem to be having during this time of volatility is if we're up one day, we're going to be down the next, and it didn't look that way until the government dumped some data on us this morning.
Well, that's true. We had some good numbers coming into this morning. I mean, I was looking at futures; they were pumping up really high, but they are trailing off. Given what we're seeing in the jobs front that reported today. And that was a huge disappointment at 210,000 non-farm jobs. Man, the expectation, Dave, was like 573,000. That's a big miss.
Yeah, we missed by over half, and the fact that they revised upward the numbers for September and October, they were relatively small upward numbers. They bumped them up by like 10%. But it was nowhere near the kind of gain they needed in order to show 210. And you and I were talking before we went on the air. Both of our bull crud detectors are going off at really loud volumes because if you remember the ADP number from Wednesday morning, ADP said the private sector added like 500,000 jobs last month. Well, somebody's way off in left field, and I'm kind of wondering because we're right at the first couple of days of December. Those government numbers are based on a survey of 50 states, and I gotta kind of wonder whether or not we're looking at some vital figures missing in the federal government report. How about you?
Well, that and the other thing that really throws me off is the unemployment rate. They say the unemployment rate is 4.2%. If we didn't have as many people go to work, how does the unemployment number go down? That just doesn't quite add up to me.
Yeah, my original number showed steady at 4.6%, but again, if we're not creating the jobs, more people entering the workforce, and some are going out and looking. Whether my number that I got on steady or down, either way, it doesn't make any sense one way or the other.
No, I think we'll see some revisions next month.
I got to believe it. Hourly wage was the other thing that the federal government reports on the first Friday of the month, and they showed that we're earning on balance 4.8% better than we did last year at this time. Kind of too bad the inflation rate is more than that, right?
Well, that's right. I mean, and that was a slight miss too. I mean, my guys expected 0.4% increase for the month, and it only was a 0.3% increase. So that was a slight miss on increased hourly earnings too.
Yeah. So it's in the best case scenario, it was a kiss in your sister report, but actually, since everything was such a big miss, I'd call it not good news. And the futures in the last half hour or so have kind of reflected that, haven't they?
They have continued to drop. They're still positive. Don't get me wrong. But at 10 o'clock, I think we have a number that's going to be important today too. And that's going to be the factory orders come out today, Dave.
Oh, yeah, that's right. We had a couple of late morning reports that we didn't get to earlier in the week as well. And, the market, as volatile as it is right now, they're taking even relatively minor reports and overreacting to them. I mean, the chart every day for the last, better part of a week, has looked like a seismograph after a major earthquake.
It does. Every time they come out and report something, it causes some changes in the market. Fluctuates when that happens, and we continue to see that. We would like it to be more of a structured up and down, but so far that's not been the case. We've seen a lot of volatility in the marketplace.
Absolutely. We look at both the government reaction to the Omicron variant on the COVID virus. Look at the fact that the vaccine companies are saying, yeah, we'll get a vaccine out that'll address it, but it's going to take us a few months. And then the possibility that Congress is going to be rushing through a whole pile of spending bills that may or may not be good, but they're definitely not particularly popular with Wall Street at this point. We're just into a real herky-jerky excuse for a Santa Claus rally here, aren't we?
Yeah, we are, and we could sure use one with some of the volatility, but I just don't know if we're going to get it, Dave. We'll have to wait and see.
Yeah, it's going to be an intriguingness 2.5, 3 weeks. That's for absolute certainty. Looking at some of the companies reporting at the tail end of earnings season, well, we got to start out with another dump. One of those companies that people don't think of as a household name, but most of us have used if we've ever closed on the sale of a home or anything. Our friends at DocuSign reported, didn't they?
They did, and they really had not a bad quarter, Dave. They came in ahead of expectations. They actually beat earnings by about 12 cents a share. So it was good news on that front, but they are tanking this morning, Dave. I got to tell you that the issue is not the past quarter, but the quarter looking ahead. And they're looking at the fourth quarter, and DocuSign gave a range for their not their earnings, but their sales of between 557 million and 563 million. And all the analysts were expecting about 574 million. That's a huge miss. And DocuSign's paying the price this morning, down 32%, way below their 52-week low. Their 52-week low was $179. Right now, if they opened up this morning, they'd open up at $159.
And that really, in the grand scope of things, that wasn't that big a miss on the guidance number. We're talking less than 10% off of what the street expected. They're really getting penalized for what they're saying they might have happen.
Yeah, they really are. That's just a big difference for them. And the other things we have, we've got Ulta, beauty supply, the cosmetics retailer. They had a pretty good quarter. They earned $3.93 a share versus the $2.46 as was expected, and they made about $120 million more than expected. So that was good for them. They are on the winning side of the ledger today, up 4.8%, opening today at 402, which is getting kind of close to the 52-week high.
It's kind of a high-priced stock for a specialty store, isn't it?
It is. So I've got three more for you. I'm going to give you the big winner for today first.
Please.
And that is Marvell Technology. Not Marvel, the comic guy, but Marvel Technology. They're a chip manufacturer, and they really had a good quarter. They beat by about 4 cents a share. Revenue topped expectations tremendously. They are actually trading up almost 22% today. They will open up at a new 52-week high at about $86 a share, compared to 76 was their previous 52-week high.
Wow. I always ask the question, I wonder what kind of chips they make, because that's gangbusters, isn't it?
It really is. It is. And then we got two More losers, Dave. Ollie's Bargain Outlet. We've got one up in Avon Park. They had some disappointments, not necessarily. Well, they did disappoint in earnings too. Let's see if I can find it. It's not on my normal cheat sheet. But they missed on their earnings by not a whole lot, but enough that they're getting killed this morning. They missed by about 13 cents a share. Revenue, I don't have that number, but I know that here's the deal. They came out and said for this next quarter they're going to have issues too, because they continue to have issues with getting supplies and then what it costs to get them to them. They, like DocuSign, are going to open up at a new 52-week low. They're down 21% right now.
Holy crud.
Yep, they'll open at a little under $50 a share. The going 52-week low was $57 a share. So they're taking a beating this morning. The last one I have for you today, not quite as bad as that. Those two that we've talked about, but Big Lots came out. They missed in earnings and revenue. They say for sure their freight costs will make the full year margins decline, which is not good news for them. They're down 1.5% today. They're barely above their 52-week low at $43 a share right now.
Ouch. You know, both Ollie's and Big Lots strike me as a business plan that's just going to have to weather the storm, because those businesses specialize in surplus sales from other retailers. Now, the other retailers can't get anything in. The full-price stores ain't giving up a lot to the surplus liquidators. So I got to believe they're having trouble. I mean, Big Lots and Ollie's got to work a lot harder to fill their stores up, don't they?
That's right. Absolutely. And it costs more to get the stuff here.
Absolutely. I mean, they aren't letting go of it quite as easy in the big box stores because they don't have as much to fill up the shelves anymore.
Yep, that's true.
Makes a difference. Resetting the table. Update yesterday on Wall Street. Some disappointing economic news this morning. 45 minutes before we open up and throw some real money around. What are we looking at?
Hey, we still got green ink on the indexes. We got the Dow up $70, which is about 0.2%. The S&P 500 is up a little over $13, almost 0.3%. NASDAQ's up about 1/3%. Small cap Russell 2000 is up 0.6%, the best deal we got going right now. On the other side of the coin, the commodity side, we've got silver basically flat right now. Gold's up 1/3%. Crude oil's heading back up. I mean, it was, I think, about where it was yesterday, but it's up 3.1% from the close at $68.58 a barrel.
I kind of like that $64 number that I had this morning. Let's try to talk it down a little, shall we?
I think so. That would be great.
It'd be fine. Take a look at the overseas markets. Asian Rim mostly up this morning on the strength of our performance yesterday. Europe is looking at our green ink from yesterday and at least holding on to green ink this morning so far. And they're mostly up, although not as dramatically as some of the Asian Rim was. Phillip, it's that time of the year where we start looking for a Santa Claus rally that we don't know what's going to happen. Don't count on a Santa Claus rally for your retirement funds. How do I find you in order to stabilize my fund?
That's right, Dave. Hey, give us a call at 863-382-0037 to walk through our core retirement design so we can help you design retirement you've always dreamed of. But today, folks, don't forget, it's Shred Day here at Statler Financial, and it happens from 10 to 2. Please don't come early. There's fog up in Winter Haven. That I'm afraid the trucks may be delayed just a little bit. So please don't come early. I know there's a lot of folks that like to get here early, but please don't come until 10. That way we'll be ready for you and have everything streamlined and ready to go where we can get your stuff to the shred truck and get it shredded for you.
And I'll be down there about 10, ready and raring to help folks unload their trunks as they drive through and get rid of their old valuable paperwork that they don't want prying eyes to see, right?
That's right. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
Thank you so much. Normally I'd say I see you on Monday, but it looks like I'm going to see you in about an hour, right?
That's right. That's right.
Thank you, my friend. I'll see you then. It's 105.7 Light FM and Statler Financial Services. Phillip Statler. One old credit card bill.
Hey, folks, again, I hope you have a great weekend. I hope I'll see you down here today from 10 to 2, getting your stuff shredded. I look forward to it. Have a great weekend. If I don't, until Monday, bye now.